is a presentation of TFNN.
Let's go to David from Clearwater.
Hey, Steve. Thank you for taking my call on this one, and to pass a compliment to you. Taking a lot of classes from Tom since I became a Tiger back in 2009, and they're always phenomenal classes. And last Friday was my first class with you. And just want to say, Steve, fantastic. You were well prepared. The material was excellent. It was timely. It was a really, really, really good class, and you kind of opened my eyes to a few things that have enabled me to use your terminology. Take massive action.
Hey, there you go. I love it.
Live at TFNN, The Trader's Edge, with your host, Steve Rhodes.
And he's picked out a landing spot that is a good 25 feet above the hole.
There's a good chance he doesn't get this inside the Marco's ball.
Well, here it comes. Oh, my goodness. Anything like that. This guy's pretty good.
Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the May 15th. Terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating your financial freedom. My condolences to all the Boston Bruins fans. Of course, I know exactly how you feel after you guys beat my Detroit Red Wings. And congratulations to the Montreal Canadiens, also known as the Habs out there, and hence really the letter H on their jerseys, which is an abbreviation for Les Habitants, you know, the informal name given to the original settlers of New France back in the 17th century. Of course, if you were a historian of hockey, you know, you might tell me that that H wrapped around by that C on their jersey stands for Club de Hockey Canadien. And, of course, you're right. It is Terrific Thursday, and that means the best way to start our day, well, it's to have clear outcomes, which is why my outcome for the next 2 hours is to teach you how to master the tools for trading. And that includes the tools of the mind, because when you and I, when we master the tools of the mind, well, we begin to think like a strategist. So this morning, you'll hear me use tactical terms like A to B equals CD patterns, or swing points, or Gartley patterns, maybe even some evening stars, hammers, shooting stars. All those are signs built by the Bulls and the Bears. And yes, each of these terms, each of these tactical patterns, they help us to project future price levels. They help us to identify support and resistance. But here's the key. Tactics, and I do mean tactics without strategy, that's a recipe for failure, and that is not an option in my playbook. So no matter what it is that you're trying to master in life, I want you to think like a strategist, because strategists, they will slay a tactician all day long. And you can use this throughout your entire life. Example, if you're a salesperson, and folks, who's not a salesperson? We are all salespeople, because in order to be a salesperson, it's just another word for an influencer. And we must be influencers. You see, each of us have to influence someone. Sometimes many folks, just depends on how many businesses you own. If you run a household, you've got to influence folks. If you are a one-man, woman, or army making trading decisions, you've got to influence yourself. So, here's the deal. Influencers really, if you're, let's say you're that salesperson out there. Now, we've got folks that actually qualify under the term of salespeople out there. And that means you've got to perfect your core story, which is also known as education-based marketing. So when you are thinking like a tactician, if you're just selling features or what have you without education, and the markets are always educating us, if you're doing that, you're going to get slaughtered. The market, folks, it is always educating us. So let's go look at one of our tools to help us think like a strategist, because this is important. This is the tool I call perseverance makes the difference between success and defeat. Picture this. A despondent man who had lost his job and completed several dozen interviews without finding new employment was given the advice to continue looking forward to his next interview. In amazement, he questioned that advice, saying, "Why try again?" The reply was simple, because with each and every rejection, he was moving a step closer to the job that was really waiting for him. Imagine, folks, imagine an outcome so strongly that you want at the summit of a steep and slippery mountain. Next, imagine a heavy stone placed on your back just before you begin to climb. How do you feel the higher you climb? Excited? Tired? Frustrated? Look, if you fail to reach your outcome the first time, or even the second, the third, the fourth, what is it that's going to keep you going? Yes, it's that word perseverance, because perseverance makes a difference between success and defeat. Perseverance is the voice within you saying, if at first you don't succeed, well, try again. How about Thomas Alva Edison? He became a railroad newsboy at age 12. At age 15, a telegraph operator. In his spare time, he studied, he performed experiments. In fact, it cost Edison more than $40,000 in failed experiments to produce the first incandescent lamp in 1879. Folks, 1879, 40 grand in 1879. It's equivalent of about $1 million today. I would say Edison persevered. How about Abe? Good old Abe. Abe Lincoln, he never stopped reaching for his dreams. He had to overcome the death of his mother and sister when he was a child, the death of his sweetheart, a nervous breakdown, the death of 3 sons, defeat as a candidate from the state legislature in 1832, a failed business partnership, a huge debt that had to be paid off once the partner died, defeat as a candidate for Congress in 1843 and 44, he was defeated as a candidate in the Senate in 1855. He was defeated as a vice presidential candidate in 1856. I would say that Lincoln persevered. In the dictionary, only the dictionary does the word success come before the word work. Work hard at your outcomes, overcome the obstacles placed in your path, and above all, persevere. Because perseverance, that makes a difference between success and defeat. It is Terrific Thursday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Let's get things kicked off out here right now. We've got Dow futures trading off 32 points. They're trading out at 16,554. S&P down 4.5 points, trading out at 1880. NASDAQ off about $4.50, trading at 35.91. Russell 2000 off 6 points, trading out at 10.95. King dollar on the move today, up 195 ticks. It's up trading out at $80.33. Goldilocks, back $10. Trading out at $12.95. Silver off a little over 1% this morning, down 22 cents, trading out at $19.55. Light sweet crude down 52 cents, trading out at $101.85. Our call-in number, you know it, 877-927-6648. You give me a call. Happy to take a look at your stock chart, answer whatever question I possibly can. A quick peek across the globe. Kind of flat markets over in Europe. DAX is down 13 points. FTSE is off 8 points. No big shakes out there. A little different story in Asia last night. Nikkei off 0.75%, down 107 points. Shanghai off 25 points. That's a little over 1%. And the Hang Seng was up 148 points, up 0.6%. So let's begin our day. Let's take a look at weakness in the markets. Let's take a look at the Russell 2000. I've got the Russell 2000 daily contract up. I've got the continuous contract up on my screen here. If you're watching this on TigerTV, remember, I have a 10-minute delay on this chart out here. So and if you're listening on your radio or your mobile device at TFNN.mobi, we appreciate that very much. Of course, let me describe to you what it is that we're looking at here. Number one, if you watch us on Tiger TV, there's a number of different lines on the charts. In the main chart area, there's a thick red line, not too squiggly. That red line, that's the 200-day exponential moving average. It always poses a problem when price gets below the 200-day exponential moving average. Why does it pose a problem? Well, trading desks around the world, they're looking at this same chart. Well, of course, they're not looking at the Rhodes momentum indicators. They wish they were, but you are. You're here at TFNN.com. And it says, just simply tells us, selling pressure, selling pressure, selling pressure. Remember, a couple days ago, when the Russell 2000, when the futures contract, the IWM, the index, big thrusting day on May the 12th out here. Of course, what price did was it stopped up towards that black line out there. And that black line is your 200-day exponential moving average out there. So that is a containment area. We've seen price pull back. Yesterday, the Russell 2000, the weak link in the chain out here, it pulled back with volume. Trade out at 1095.30 right now. So it pulled back with volume. What does that say? It says it ought to go back and test the lows of May 9th. That low, by the way, that price out there, that's the swing point that it's trading into. That low is 1087.10. I can't tell you whether it's going to bust through that. It's got some support in this area. The support last time that price was down in this area prior to that swing point was back on April 15th, I should say. Formed a little morning star pattern out there. That's a reversal area. That tells you where the bulls, in fact, are camped out. The low on that trading session was 1090.80. You're at 1095. It does make sense that area will get tested. You're also, not you, but the Russell 2000 is also trading back into the February 5th swing point out here. The top of that is priced out at 1096.70. Low is 1078. So it's really the lows that we've got to focus on, because all those lows, there was a nice bull slash candle. So the bulls really should be flanked out. They should be in this area here. We'll see how this plays out today. You get a close below that. But again, that 200-day exponential moving average, that's got to have trading desk operators out there a little twitchy if they are weighted inside of the small caps out there. Now, not the same story. Here's a market where we've got a bit of divergence. Certainly not the same story if we go take a look at the Dow futures. Let's pull up the Dow futures out here. We'll take a look at the Dow, the S&P, the NASDAQ. We want to really study these. If we take a look at the Dow here, not anywhere near its 50-day moving average. That's at exponential, by the way. We don't use anything simple around here. Exponential moving average, 50-day, 16,353. It's trading at 16,545 right now. So it's off about 42 points. Did form an evening star reversal pattern here yesterday. Real key is going to be at about the 16,517 level. If price breaks through that area, you know what? It says that the Dow may want to move down and test that 50-day moving average, at least get down to the lows here that came in on May 7th, formed a little bullish engulfing candle out there. The low of that is 16,305. So you got 16,305, 16,353 as your 50-day exponential moving average. You get a close below. You get your move below. You don't have to be close or move below 16,517-ish, and that probably sets off a move down to that level. That's what's going on inside the Dow. If we take a look at the NQ out here, remember that had been the weak link, one of the weak links in the chain. It's kind of broken away from that chain. It's not as weak as it used to be out here. And what I mean by that is if you take a look at this nice, again, this up-thrusting candle from May 12th out here, still just traveling inside the body of that candle. Quite frankly, any close above, and it's going to be the NASDAQ that probably gives us the signals here today and the next day, any close above 36,1350, and you've got a little bullish continuation pattern to the upside. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we were taking a look at the NASDAQ futures before we went into that break. We're looking at the daily chart out there, and really indicating the strength that's inside here. In fact, here's the daily chart using the eSignal platform, which we've got the Taz signal boxes out here on my screen, so they help us to identify the support resistance areas, also referred to, aka unfair high and unfair lows. But the real key is going to be this candle right here. This candle session from May the 12th. Nice up-thrusting candle out here. And what we can see here is, what had been a weak link inside the NASDAQ, because the NASDAQ can, in fact, go ahead and move the markets higher. Russell 2000, it needs help from its friends. And, can the Russell move things lower? Well, it's a tip-off. There's no question about that. But the real failure with regard to is when the NASDAQ continues to join along to the downside, and it just has not given that message here just yet. So there's most candlesticks out here that I refer to, they're reversals, either bearish or bullish. There's only really, there's a couple of continuation candle signals. Well, first of all, there's a number of continuation candles, meaning that if an area of resistance is taken out, old resistance should become new support. But a true momentum signal out there is what's referred to as the rising three or the falling three. And that's really what the NASDAQ at this stage here is potentially in the process of forming out there. So if we take a look at, unfortunately, its unfair lows way down to the about the 34.93-ish area here. So on the daily chart, it's really kind of in no man's land. It's not the case here when we take a look at a 240-minute chart. So I've got a 240-minute, that is a 4-hour chart on our screen out here. And the level of support is at 35.89. We can see that area has been tested a few times here recently. This box formed back on the trading session of 8 o'clock in the morning, May 13th. So it's been in play here for a bit of time. We can see that level was tested back at 12 noon on May the 14th, and it was tested here this morning as we speak right now. If 35.89 fails, then what we're likely to see here, let me pull this back, you're likely to see the old area of resistance get tested, which is back around the 35.59-ish range. And that's what's going on inside. Now, we've got one of our friends here in the Tiger's Den. He likes to use a 5-hour chart, and he trades the NASDAQ. So I'm going to go ahead and try to populate this. System's been operating a little slow, so I might come back to that for him before the break. We'll give it just another moment here. And, yeah, what I'll do is I'll come back before the break and give out those numbers, or I'll go ahead and punch those in the den just so he knows where the unfair lows are there. Let's go to, I've got them. Here, I'll put them up on the screen. There we go. Hocus pocus dominocus. In that case there, you're looking at a level of about 35.80. So at 35.80, maybe that'll help him to manage his trades. That is the area that there ought to be support on a 5-hour chart. And that is the NASDAQ. That's the NQ futures that we are taking a look at, which right now they're down about 4.5 points, so not a ton of damage yet. Now, let's go take a look at, let's put up bonds here, because this is kind of an interesting chart as I was scanning through some of the charts included in my newsletter. Now, I'm going to put the continuous contract up on my screen. And the reason I'm putting the continuous up on my screen is I need enough data to really provide good 50-day and 200-day exponential moving average lines. Excuse me, sorry about that. And that's what we have on the screen out here right now. The dark black line that's on my screen and the red line. The black line is a 50-day. The red line is the 200-day. Now, when the 50-day crosses over the 200-day, that's considered to be very bullish. Now, this is a market that has been in a very bearish mode out there. That 50-day cross of the 200, it's called the golden cross, versus when the 50-day crosses through to the downside of the 200, that's called the death cross. And what actually took place yesterday may have taken place, looks like it was really just kissing, behind the barn on May 13th. But, boy, they came outside of the barn here yesterday. Then you got a nice bullish cross out there. Very interesting. Now, the correlation between the U.S. stock market and the bonds, that has not been in play here for a while. So you got to trade each chart differently. But clearly the bulls are in place out here. Now, if I pull this stock chart back here, let's go see when we had the last death cross. The last death cross here, 50-day moving through to the downside of the 200-day exponential moving average, that took place back on May 17th. That's when bonds were up at about the 145-ish level out there. So you can see that's a line to really be respected, both to the upside and to the downside. The last time we had a bullish crossover was really when highs were being made back here in the April time frame. So it's really going to be a nice bearish signal, big candle signal that might say, okay, the move higher is over. Or maybe not, because you do have a nice bullish cross. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow down 51 points, trading out at 16,562. S&P down 6, trading at 1882. Composite off 7 points, trading out at 4,093. Russell 2000 off $6.79, trading out at 1096. Apple $2 the upside. Microsoft up 9, takes Google back 3. Leading the charge to the upside is Gentiva Health Services, GTIV. What the heck? Looks like it must be a buyout here, because they're up 67% out here. Let's see. Kindred Healthcare said to propose a price for, I don't see the rest of the sentence out here, but must have something to do. We got Clovis Oncology, though. That's up 12% here, up $6 and change. We've got Cisco up $1.54. HSBC Holdings up 80 cents. So not a lot of high flyers here this morning. To the upside. To the downside, Emergency Energy Services, EMES, down $4 off 5%. Axiom, ACXIOM Corp, ACXM. That's off 11%, down $3. X1 off 11% here this morning, down $3. Vox International, VOXX is what I should say. That's off 30% here this morning, down $3. Netflix off $3. Bristol Myers Squibb down $2.40. NQ Mobile off $2.47. Walmart down $2. Columbia Property down 6% off $1.77. So, where do I want to begin my day? Well, I will first tell you, as you know, I had been bullish. We went ahead and closed out our bullish position in the market yesterday. Have not flipped yet to the bearish side. Cautious, but not bearish side. But I can tell you, on a certain set of circumstances, and I'll go over it probably in the second hour. I want to see how the market trades here for the next at least for the next hour. Maybe one of you that's not a subscriber can tell me the reason why Steve Osan here could go full out bearish in a big way at the by the end of today's trading session out there. And even that's the riddle, but you can't be a subscriber because, I reviewed that this morning. Now, we really need to see how the market trades the entire day, but at this stage, I'm only with you for the next hour and a half. Lucky me. In any event here, let's go take a look at some things let's take a look at Goldilocks and silver. Let's go see what we've got going on here in that market. So we had gold that was pulling back. Right now, trading out at $12.95. Really nothing more than just simply consolidating here. Yesterday had a nice opportunity to move out of this consolidation, at least get up the 200-day exponential moving average. And no, wasn't able to do that. It's got a evening star pattern out here. It's a 3-candle session, so it's got some real stiff resistance. First, it's got resistance at about 13.15, but that 200-day exponential moving average at the 13.21 area, that really is a resistance. That's the wall that it needs to be able to break through. Otherwise, right now, kind of a neutral message with regard to Goldilocks out there. And really we'll see the same kind of a thing here with silver to a certain extent. Silver yesterday gave a nice message from the standpoint that it was able to close above that June 28th swing point. That level was $19.63. We saw silver. So far, it's made a 0.382 retracement, a dead cat bounce. That was coming from the high out here on February 24th, down to the low on May Day, May 1st out there. $20.02 was the exact 0.382 retracement. Got up to $20 even Steven out there. This morning, it's really testing that June 28th level again. Wants to see if it really does want to break out of there. A rejection of that swing point would be bullish and positive. The next area that it needs to really clear now is that December 31st swing point. So the next high, the next clearance level on its high jump is going to be $19.82. We'll call it 1983. If silver can close above that, then that sends up the message that silver probably wants to make a move to $20.84 out there. Have a request to go take a look at a equity. Let's go take a look at that. CWCO is the ticker symbol. Let's go ahead and put it up on our screen out here. Question is this buy, sell, hold, all of the above out here? That's a water company. Let me expand the chart out here. Let's put a weekly chart. We got the weekly chart on the screen. And this is, let me move this down. I can give you the name. Consolidated Water Company. Traded out right now at $10.69. Now, from a first sell, I would never sell something that was trading at $10.69 because they absolutely have to go out of business for me to make $10. So from a sell standpoint, only if you were holding it long, if the question is, should you sell it, then the answer here is yes, if you were going to use the TAS signal box market profiles, because its level, its unfair low is $11.54. It's trading at $10.69. And the thought process behind this, which is a volume-based type system, is that when price breaks that unfair low or that support level, it's telling you that you should not be long. Now, because the question was, hey, about a monthly chart out there. In fact, if I put the month, so from a weekly perspective, the answer is no, you should not be long this equity. I'm going to put the monthly chart out here because the question also was, hey, there is a high volume monthly high out there that one of our Tigers wants to shoot for. It may take a while for this to populate. I'm running into a bit of a delay out here I've had this morning, so I don't know what is causing that. And anyway, I can always look at a different chart for that. Let's go take a look at we'll let that populate, and instead of me stumbling around here, let's go take a look at the daily chart. Daily chart really gives us the same message with regard to whether one should be long or short out here. If we take a look at it, it's a high volume low. Thank you. If we take a look at it, daily chart said 1143 was your unfair low out here, and this is saying, hey, do not be long. This is not the time to be long. However, Let's go take a look at the A to B equals CD down patterns that are out here. Let's go see along that formation where it's at. So on the A point out here, we're going to use the swing point high that occurred on March the 20th. That high was at $13.48. The B point of this A to B equals CD, this lightning bolt pattern, happens to be the April 15th low. That's at a price point of $11.32. Makes a move up, makes a retracement into a high on May 2nd out here. May 2nd becomes the C point. That's at $13.02. You can see it's already through the 1-to-1 A to B equals CD to the downside. But take a look at this power, in essence, here over the last couple of trading sessions. This is suggesting to us that it really wants lower price. The next level that it wants to shoot for is about the $10.27 area. No bullish sign reversal as of yet. Doesn't mean you're going to see a bullish sign as price were to get down there. So on this time frame, this is telling you would not want to be long as well. Here I've got the monthly chart is populated out here, and the high volume low, I believe that we're looking at $6.35 back from March of 2009. So the top of that area is $11.28 out there. If it gets inside there, if it closes inside there from a monthly standpoint, it's trading inside there right now, it ought to go down and test that high volume low out there. So I think that was the real question. When price gets down there, maybe then it becomes an opportunity to buy out here. And that was on Consolidated Water Company. Let's take a look at things that are moving and grooving. Yeah, boy, Stevie's son here could be getting full out bearish in the market come the end of the day. Anybody out there figure out the reason why? That's not a subscriber of ours out here at Mastering Probability. Anyways, let's go take a look at some things that are moving to the. Well, you know what I want to do here first? I'm going to switch over. I want to go take a look at light sweet crude, because we took a look at light sweet crude yesterday. No, it is not the euro yen, but good. That's Mike in the den out there. It is not, believe it or not, it is not the euro yen, but we'll take a look at the currency pairs as well. I want to take a look at the light sweet crude out here. And when you find the answer to that, or when I reveal that answer to you, you're going to be like, holy cow. And cow may not be the word, the adjective that comes out of your mind out there, but it will be holy cow. So if we're taking a look at light sweet crude, yesterday we were taking a look at the potential for a Gartley sell pattern out here. Now, I was looking for price to get a little bit higher. No, it is not divergence in the RSI. If we take a look at retracements here, I was looking for price maybe to get up to about the 102.95 level. Price got up to 102.65. So I think we can cut slack. I think we can cut about 30 cents worth of slack out of light sweet crude. We saw that light sweet crude was also trying to get into this little rising price channel that it had broken out of. And this was really the first test that we've seen here inside of light sweet crude. It broke through it on April the 30th. Nice little rising price channel here that had formed back on began forming on January 13th out here. So now we've got a pattern that completed, tried to get inside the club. The club has denied entrance in there, and now what we're seeing here today is a reversal signal. It looks like a shooting star, smells like a shooting star from yesterday, but I think the wick on the bottom of that is just a little bit too much. Nonetheless, you got a nice little bear sash candle here that is in place as we speak right now today. So this may be a trade, SCO, as an example. SCO may, in fact, be the trade out here. You want to see how it closes today, because the reason is that what I believe is if this is, in fact, a real breakout here, if this is a real bearish look inside of light sweet crude, I think we're likely to see light sweet crude move down. 97.30 is your 1-to-1 A to B equals CD. But when we go back and we take a look at the weekly chart, I believe based on the and again, I didn't get a chance last night to I'm trying to build a brand new computer system, something pretty powerful out there, just simply needed based on everything that I do, and in any event, getting off track here. But I do believe that the large commercials have not exchanged their huge net short. And when I mean huge net short position inside light sweet crude, largest ever. This was as of a couple weeks ago, so I don't think that it's changed out here. But it says that light sweet crude ought to trade down and now test the bottom of the weekly rising price channel out here, and that would be in about the 96-ish type range out here. 95.81 happens to be the largest number of, it's the price area where we've got the largest number of co-located opens and closes. In fact, 95.81. Let's go ahead and put the signal box back up on the screen out here, and let's go pull up. Light sweet crude. Now, the ticker symbol, if you're looking over on the left-hand side, I've got a little bit of a delay on this one, too. And the reason that I've got a delay on this is because in order to really get the TAS signal boxes to work, what we have to do is we've got to join all of the futures contracts together. So this is a version here of not actually using the continuous contract. It's not using the current contract. It is a way to be able to get all of the price data together, link everything together, so that it can give us the proper unfair highs and lows. So you'll see a little squiggly line if you're watching my screen, especially if you're in the den, you're watching things on high definition out there. And so I want to put the weekly chart back up on my screen, but let's go take a look at the daily chart. Yeah, it's taking a little bit of time here for that to populate. So I'm going to leave that, and we're going to go take a look at something else utilizing one of the other charting tools, and then we'll come back and take a look at the weekly chart. So in any event, light sweet crude here giving us a pretty decent signal. Let's go take a look at the and a number of folks trying to answer my question. They're all good. They're all good suggestions with regard to why is it that Stevie Sound here could get just full-blown bearish on the markets. And question was it an Astro date? And the answer there is no, not really, but another good suggestion. One was, hey, is it because it's trading below the moving average in the small caps? Another excellent observation, but the answer is no. And at this stage, no one's even real close to it. But when I do reveal that to you, when you do see it, you're going to be like, that's right, holy cow. In any event, let's take a look at the daily chart here for the euro, see what it's doing. We know that the euro here, which had a nice breakout stage, I mean, huge breakout that was staged here in the euro, getting above 2008 trend line and channel line. It is now moving back to the channel line out here. That channel line should take us down to about the 1.3611-ish area, back to the it's already trading back to the swing point here from the trading session of April 4th, and that's out at a low of 136.71. There's no real A to B equals CD pattern that is present inside of the euro. So right now we'll see if, in fact, that level adds as a support area. And if it does not, boy, that says that it was truly a false breakout. Now, what we also know about the daily chart here, as it's moving down and testing that the bottom of that channel line out here, what we do know is that price is also moving towards the oversold condition using that 14-period relative strength indicator out here. So, and you can see the times that the euro gets down here. You see, this is a great indicator because it can be used for all different tools. Last time down into this level was when the euro was making a low back on November 8th of 2013, November 7th, 2013. So it was moving back into this area here. That was also the bottom of the rising price channel that thus far it has broken through to the downside. But it's really going to be the larger trend that we're going to focus on and pay attention to. Let's go check out a couple of the other currency pairs. Well, I have maybe just a few brief moments to take a look at one. That's going to be, let's look at the weekly chart here for the U.S. dollar, Japanese yen, of course. Big, huge move off of the bottom back in 2012, forming this nice rising price channel. Price just moved sideways, but it is testing the bottom of that price channel out here. Nothing enthuses me when it moves sideways to try to break a trend out here, but right now, that's what we've got going inside of the U.S. dollar, Japanese yen. 877-927-6648. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's off 96 right now. S&P is down 12. NASDAQ off 32 points. Russell 2000 down hard off 1 4/10% off 15 points out here. We've got the S&P Volatility Index up $1 right now, up about 9%. So one of the things we've got to be watching for today is if the Volatility Index is up by 10% or more in one single day, says that you're going to have a market bounce over the course of the next couple days out here. But we've got to take things one moment at a time. Now, I want to go back here to the oil complex. And again, we're taking a look at light sweet crude. Remember, this chart here, because of having the link together the contracts in order to really take a look at, in order to get an accurate market profile system out here, I've got a delay on it because I'm using a symbol that's not a symbol that the system actually recognizes. But if we take a look at the daily chart, well, if we take a look at the weekly chart, let's put the weekly chart up here on the screen. The weekly chart shows the unfair higher resistance at about 103.19. Now, price has not been able to get up to that level. The unfair low, 96.86. So at any point in time on a weekly basis, if price closes below that area, that would say, okay, you've got a short signal on the weekly chart for light sweet crude. On the daily chart here, the daily chart, on the other hand, says right now that, hey, not so fast on pulling the trigger to the short side. I say because of patterns, because the Gartley sell pattern, because of the rising price channel and so forth, which is not identified here on the chart, I would say, okay, we've got a different pattern. But the real key here is $100.28. 100.28 should be support inside of light sweet crude. If, in fact, you see it close on a daily basis back below that area, that would be giving you at least a signal that, you know what, you can go ahead and, because of the other patterns, the other signals, you can go ahead and take that trade inside of SCO. And then, of course, you're going to be paying attention to what happens as price gets down to about $98.46 out there. Price closing below that, that would be nice and bearish on the daily chart. If we take a look at the, there's the 300-minute chart out there. Let's put the 204, well, on the 300-minute chart, 101.77, which is what we saw take place out here during the trading session here this morning that we're in, this 5-hour trading session. That acted as resistance. Support here right now, 100.73. So that's what's going on inside of light sweet crude. It probably will take a little while for this to populate out here, so I won't come back to it. But what I do want you to do, folks, is it is really time to be careful out here. When we do the first hour, I'll do it during the first segment of the next hour. I will share with everyone what it is that I see that is the most bearish. You know, I'd say I give a ton of information to newsletter subscribers, and I don't like to share with necessarily everything with everyone because I have paid subscribers and they're paying me for all that information and so forth. But at this stage here, I also have a fiduciary responsibility, especially when there's something as significant as what it is that I'm looking at here that you need to be aware of too. The real key is going to be what happens at the end of the day. It's not what happens during the first 27 minutes of trading, but it's going to be what's going to happen at the end of the day out here. So during the first segment of the Money Masters show, I will go ahead and share with you what it is that I'm looking at. One of the response was, hey, is it the Euro-Japanese yen? Now, the Euro-Japanese yen, if we take a look at it right now, it had completed a 1-to-1 A to B equals CD to the downside here as we speak this morning. That price objective was 139.07. You're trading at 139.01 right now. It did break a bearish pattern out here. There's a couple of bearish patterns. It does have a measured move because we have a consolidation. We do have a 0.786 Gartley sell. So it does look like the Euro-Japanese yen is on course for its next move down, which really should be in the 137-ish area. So, folks, it is a terrific Thursday as always. Thanks so much for joining me. Have a great day. If you're off to start it, don't forget to tune in the first, at least the first segment of next hour, because I'm going to share with you something that you absolutely need to be aware of in navigating these markets. Have a great day, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.